now turn our attention to the capital goods stroke infra stroke power segment. Sumit Kishore, the Executive Director, Capital Goods Power Infrastructure at Axis Capital, is with us on the show now. Sumit, morning. Wanted to get your thoughts in on this entire smart meter opportunity. This week, we've seen Genus Power hit upper circuit after the tie-up with GIC. Yesterday, Tata Power announced a order win, which is related to smart meters. How are you assessing the opportunity, and what's the best way to play it from the listed stock market space, listed stocks?
Good morning. Thanks for having me on the show. I think the government launched the revamped distribution sector scheme, RDSS, almost a couple of years back. The scheme targeted, 12 to 15% AT&C loss by FY25, and they also targeted 250 million smart meters by 2026 and 100 million smart meter rollout by, December 2023. So the picture on the ground today is that cumulative achievement of smart meter installation so far has been just 6.6 million meters. So it's been a slow start, but things seem to be picking up. The cumulative value of smart meter tenders in FY23 was around 680 billion rupees, but the award to tender ratio was actually less than 10%. In July so far, about 40 billion rupees of smart meter contracts have got awarded, and versus 60 billion rupees in the entire FY23. So the opportunity has to be played via both utilities as well as smart meter manufacturers. The utilities' role on smart meter projects will be deploying capital and project management to first commission the project and then O&M over the residual period of the typically 10-year concession. The utility is in it for the equity IRR. The smart meter suppliers, the likes of Genus, HPL Electric, Schneider Electric, and others have a large opportunity ahead. And we think that the achievements under the RDSS scheme so far have been a fraction of the 2026 ambition.
So just to get the numbers right, you're saying the government's ambition is to have 100 million smart meters by December of this year. But so far, we've only hit 6.6 million, right?
I think that target was given 2 years back, so it is going to slip.
Okay.
But I think the point here is that the opportunity size is quite big relative to what has been achieved.
And between the listed players, there's Genus, there's HBL, there's Schneider Electric. Is there any preference?
No. We don't have rated coverage, and I won't be able to give stock recommendations.
All right. Hi, Sumit. Thanks so much for putting all those numbers into perspective. I want to focus on one of the frontline names, which is Tata Power. They won an order for smart meters yesterday. So just to understand this correctly, manufacturing will be done by the players you mentioned, Genus, HPL, Schneider. And Tata Power will be involved in the supply, commissioning and O&M. Are we reading that correctly? Because yesterday the stock was very, very excited.
Well, that's right, Nigel. The 17 billion rupee contract, Tata Power's role will be as a utility. They will be commissioning the project first, doing O&M, and this will be a 10-year concession for them. So they are in it for the equity IRR. So they will be doing project management and commissioning first, followed by O&M.
Okay. You also recently met with the CERC. Can you give us a sense of the health of the power discoms in India and also how you see the supply and demand and the tariffs play out? Give us the big picture,
Yeah. I think I was quite excited to hear not just from CERC, but the frontline utilities in the sector that AT&C losses in the country have come off quite sharply. Till about 2-3 years back, AT&C losses in the country were about 22%. They fell to about 16-17% in FY22. And, if the power secretary is to be quoted, we are at about 13.5% as of FY23 end. I think that's a stellar achievement which has happened after the rollout of the revised late payment surcharge scheme, which has brought in a lot of payment discipline, and discom dues are down almost 40% on a year-on-year basis for Gencos. I think that's a positive development. I think overall, we are just beginning the journey on the long road to clean energy transition. I think that peak time deficits are here to stay. There is a growing realization that intermittent renewable installed capacity alone, could cross India's peak demand in 3 to 4 years. To manage grid intermittency issues that this may trigger, in a thermal heavy generation country like ours, there is a concerted push for hybrid wind and solar RE capacity addition and electricity storage solutions. I think that the highest common factor for green hydrogen, pumped storage hydro, or battery energy storage systems is the need for hybrid wind solar projects. We see opportunity for wind or solar equipment suppliers, EPC and O&M opportunities, and from a developer standpoint, there is a lucrative opportunity for Indian conglomerates in hard-to-abate sectors like steel, fertilizer, oil and gas, and particularly those conglomerates which have captive IPP arms. The latter will be able to bypass intense competition in competitive bid wind solar projects and make better IRRs.
All right, Sumit, you want to put in a couple of names in there? Going by all you said there are a lot of opportunities in a whole host of spaces that you just mentioned. Can you put some names to them from the listed space? Who could do better from here on? How much of the good news has played out?
So, Nigel, I think that the IPP arm of Government of India is NTPC. They have won RERTC contracts from the likes of BPCL, HPCL, IOCL, Indian Railways, to name a few. And I think that's a long roadmap of growth ahead for NTPC. So we are bullish on NTPC. We are also bullish on the IPP arms of conglomerates in hard-to-abate sectors like JSW Energy and even Tata Power over the next 2 to 3 years.
Sumit, great conversation. Thank you very much for joining in this morning. Have a good day and a good weekend as well.